Grant relating to fixed assets is capital nature. Yes. If it is related to something, if it affects your balance sheet, if it affects directly your balance sheet, normally it is a capital nature. If it affects your P&L, maybe it may be an income nature. We will understand what it is. We will understand what it is by going through directly what are the topics covered under this one. Okay. So methods of accounting. Methods of accounting. As I said, capital nature, income nature. Assume government is giving plant and machinery. Government is giving plant and machinery at free of cost. Government is giving plant and machinery at free of cost. Whether it is a capital nature or revenue nature. Whether it is a capital nature or revenue nature. Capital nature. Hey mom. Okay. Capital. Fine. So fixed assets. If government is giving fixed assets, it is a capital nature only. So now the question is, if I receive fixed assets from the government, what is the accounting treatment? What is the accounting treatment as per AS told? Okay, that is what we are going to learn. Assume I received fixed assets from the government. Then what is the accounting treatment as per AS told? They give two alternatives actually. Under this fixed assets category, they give two alternatives. First we will discuss, then we will go to the second alternative. Under the first alternative, this is the accounting treatment. Under the first alternative, this is the accounting treatment. What is the accounting treatment? Grants related to fixed assets should be presented in the balance sheet by presenting the grant as a deduction from the gross value of the fixed assets. Grants related to fixed assets should be presented in the balance sheet by presenting the grant as a deduction from the gross value of the assets while arriving the book value. As per you, what is the meaning of this one? Assume the fixed assets cost of fixed asset is 100 rupees. Cost of fixed asset is 100 rupees. And I received grant from the government. To 50 rupees. Okay? Cost of fixed asset is 100 rupees. Grant is 50 rupees. Then what is the accounting treatment as per this first alternative? Where I should present, how I should present. Just think. I will explain you further. Just think yourself and give me some answers. You know fixed asset. Fixed asset is an asset. We have to present in our balance sheet. Right? So fixed asset value cost is 100 rupees. Okay? Historical cost is 100 rupees. I got 50 rupees from the government. Then what is the figure I will present in the balance sheet as under the asset category? Just give your views. Okay? 100. Cost of fixed asset is reduced by grant received. Okay. We have to deduct the government grants. Good. 95. Why 95? 100 is my cost. Grant is 50. Then what will be the amount I should present in my balance sheet? So most of you gave the correct answers. That is 100 minus grant equal to 50. Okay. That means if my cost is 100, and I received the grant 50 rupees, means 100 minus 50 equal to 50 is my revised book value. Got it? 50 is my revised book value. Okay? So I'll try to explain by opening my pen tablet also. Just wait for a minute. Can you able to view the whiteboard? Can you able to view this whiteboard? Okay. Okay. So first alternative. First alternative. Under that example, 100 rupees cost of the asset, cost of asset 100 rupees, 50 rupees grant. Then what is the accounting treatment? Accounting treatment under first alternative. Okay. So what I should do? My balance sheet, liabilities, assets, fixed assets, cost 100 rupees minus grant 50 rupees. So 100 minus 50 equal to 50 rupees. This is what I'm explaining. This is what I'm explaining. This is what mentioned in the PowerPoint also. Okay. Shall we proceed further? Shall we go to the second alternative now? Shall we go to the second alternative? Shall we proceed? Okay. So second alternative. So before getting into second alternative, there is one more question, one more doubt. What is the doubt? Refer the second para. Refer the second para. What is mentioned in second para? If grant related to assets, equal to, if grants related to assets equal to the cost of the specific fixed assets, the assets should be shown in the balance sheet at a nominal value. What is the meaning of this one? What is the meaning of this one? What they are trying to say is, say for example, cost of the asset is 100 crore. Cost of the asset is 100 crore. Grant, we received grant from the government, that is also 100 crore. Cost of the asset is 100 crore. The grant which we received from the government is also 100 crore. Then under the first alternative, what we will account? 100 crore minus 100 crore equal to how much? 100 crore minus 100 crore equal to how much? 0. So instead of 0, we have to put some nominal value. Nominal value means what? Nominal value means what? Nominal value means you should not think face value. Face value of the share. That is another meaning of nominal value. But here nominal value means minor amount, does not have any significant value. Does not have any significant value. That is nominal value. Nominal value means, for example, 100 crore is my cost of the asset. Grant is also 100 crore. So I should put 0. Instead of 0, I will put 10 rupees. That is nominal value. Why I am putting the 10 rupees? I just wanted to show there is one asset in my company. I just wanted to show to my shareholder there is one asset available in my company. It is having 0 balance because of the government grant, but I am using that asset effectively. You got it or not? That is why I am putting the nominal value. Okay, it is nominal value means don't think that is share value, face value, not like that. Nominal value here means the value does not have significant effect on the financial statement. For example, 100 crore cost of the asset, I am just putting some 10 rupees. Why I am putting the 10 rupees? I am just presenting in my balance sheet that to my shareholder that I am having one asset. That asset worth is 100 crore, but because of government grants 100 crore, my value becomes zero. Instead of zero, I am putting 10 rupees in my balance sheet under the asset. Okay, that is nominal value. So here in the same case, here in the same case, asset worth is 100 crore. Its asset worth is 100 crore minus grant is also 100 crore. Actually, I should put zero. Instead of zero, I put rupees 10. This is nominal value. 10 rupees only. The value does not have significant effect in the financial statement. Okay? Understood? Shall I proceed to the next alternative? Fixed asset second alternative. This is for the nominal value category. So I'll move to the next alternative. Why nominal value? How they fix the nominal value, sir? We can fix 100 rupees, 10 rupees, 50 rupees, depends on the business size. For example, that company is running, that company's balance sheet totally, they are having 1000 crore assets and liability. For that, nominal value 10 rupee. 10 rupee means no impact on the financial statement. Okay, that is nominal value. You can put 10, 20, 30, 40, which you feel that does not have any effect on the financial statement. Okay. What is the next thing? We'll move to the next slide. Picture as a second alternative. Suppose the same fixed assets, if I receive same 50 rupees as a grant, I can use account under the first alternative and I can account under the second alternative also. What is the second alternative? Grants related to depreciable fixed assets may be treated as deferred income. The deferred income should be recognized in the P&L statement on a systematic and rational basis over the useful life of the assets. Such grants should be allocated to income over the periods and in proportion in which depreciation on those assets is charged. Can anybody read and explain what it is? Can anybody explain what is the meaning of this one? Grants related to depreciable fixed assets may be treated as a deferred income. The deferred income should be recognized in the P&L statement on a systematic and rational basis over the useful life of the asset. Such a grant should be allocated to a proportion in which depreciation on those assets is charged. Any idea? Just share your idea how to account this category. Able to guess or not able to guess? Not able to guess means you put no. I'll explain this. Okay. So the same example, as I said, 100 rupees is cost, 50 rupees is grant. Okay, this is second alternative, depreciable asset. Assume this is depreciable asset. Assume this is depreciable asset. Life of asset is 5 years. Life of asset is 5 years. Okay. So in this case, what to do as per the second alternative? In this case, what to do as per the second alternative? So what they are saying is, instead of deducting the full amount in the first year, we have to proportionately allocate over the period. How to do that? How to do that? So what they are trying to say is liabilities asset. Okay. This is the opening balance. This is the opening balance. Zero. Year zero. Okay. Year zero. What is the cost of the asset? Cost of the asset is how much? Cost of asset is how much? 100 rupees. And in alternative, we used to deduct from 150. We should not do that. Here we have to write in liability side. Deferred government grants. Deferred government grants is how much? 50 rupees. Okay. This is the step they are asking us to do. Then what to do at year 1, sir? Then what to do at the end of the year? End of the year, what to do? End of the year, what to do? What is the life of the asset? What is the life of the asset? Life of the asset is how much? Life of the asset is how much? 5 years, correct? Life of the asset is how much? 5 years. So 5 years is life of the asset. What I will do? Depreciation in straight line method. Cost of the asset is 100. So 100 divided by 5 equal to 20 is my depreciation. Correct? 100 divided by 5 equal to 20 is my depreciation. What I will do at the end of the year, 100 minus 20. 100 minus 20 equal to asset value is 80. Come to the left hand side, that is liability side. Liability side, what I will do? 50 rupees is the opening balance. What is the life of the asset? Life of the asset is 5 years. What I will do is 50 divided by 5 equal to how much? 10. This 10 I will reduce from my liability. 50 minus 10 equal to 40. Then what is the next step I will do? Next step I will do year end P&L account. First year P&L account. First year P&L account. First year P&L account. First year P&L account, what I will do? Depreciation. To depreciation how much? To depreciation how much? 10 rupees. Deferred income should be credited account. Deferred income. Okay? 10 rupees. Credited to P&L account. So ultimately, I have depreciation and I transferred this grant as a deferred income to my P&L account. Okay? This is for the first year. Now you tell me second year what to do. Now you tell me second year what to do. Second year what to do? Tell me. Second year balance sheet. Tell me. Opening balance of the asset is how much? After depreciation. So cost of the asset 100 minus 20. 80 is opening balance of the asset, and liability side. Liability side. Deferred government grants. 40 rupees is my opening balance. Correct? That is 50 minus 10 equal to 40 rupees my opening balance. Now tell me what I should do for the second year. Asset side what I should do, liability side what I should do. Asset side what I should do for the second year. Tell me. Asset side, what I should do? For depreciation at the year end, what I should do? 80 divided by 5. 80 divided by 5 or 100 divided by 5? 80 divided by 5, 100 divided by 5. Asset side, depreciation 100 divided by 5. Correct? 20 is my SLM taken as a depreciation. So what I will do, 80 minus 20 equal to 60. Correct? Then what about deferred grant, government grant side? What I will do? What is my opening balance? 50. 50 divided by 5 equal to 10. Correct? So my 40 is my opening balance for the second year. So 40 minus 10, that is my closing balance. Correct? Now for P&L account. Now for P&L account, what I will do? For P&L account, what I will do? What I will do? Income side, what I will do? Expenses side, what I will do? Expenses to depreciation, how much? 20 rupees. Income side, what I will do? By deferred income. By deferred income, what I will do? 10 rupees. Like this, we have to do it for 5 years. Like this, we have to do it for 5 years. So this is what the second alternative. This is what the second alternative. Okay? Can I do it for third year or we'll go to the next step? We'll go to the next point. Can I do it for third year or I'll go to the next point? Next point or third year? Next point, can I proceed? Okay. Next point. So next point. The grant treated as deferred revenue income and charged off on a systematic and rational basis over the useful life of the asset until appropriated disclosed as deferred government grant under resource and surplus in the balance sheet. This is continuation of the previous point. This is not separate point. This is continuation of previous point. This is also explained. I am presenting liabilities. Under the liabilities, I am presenting as a deferred government grant. That is what they are saying. Got it? Liability side, we have to present as a deferred government grant. Every year we have to write off and we have to transfer to P&L account. Is there any benefit of adopting second alternative? That is the question. It is not like that. It is your choice. You can adapt the first alternative or you can adapt second alternative. But the examination point of view, if question is silent, then you have to write both the answer. Both the alternative you have to give. Okay? So, but it is very easy to calculate the first alternative method. Examination point of view or practical point also very easy, because first year itself we are going to reduce everything and revised figure only we are going to provide depreciation. But second alternative we have to do a lot of workings. First year, second year, third year, fourth year, fifth year, like that. So we will continue to the next slide. So the next point is little bit different point. If the grants related to non-depreciable assets like land, the amount should be credited to capital reserve. If the grants related to non-depreciable assets like land, the amount should be credited to capital reserve. What is the meaning? First you complete this one. Once I proceed with the next point, wait for some time. Any doubts after completion of this one, you can ask me. Okay? If the grants related to non-depreciable assets like land, the amount should be credited to capital reserve. So what is the meaning? Why we are crediting capital reserve? Non-depreciable assets like land. So what is the accounting treatment? What is the accounting treatment? I will directly explain you the accounting treatment. So what they are trying to say here, second alternative, non-depreciable asset. Non-depreciable asset only this is applicable. Land, one of the example is land. Okay, what we have to do in this case? In this case, what we have to do? So land we received from the government, 100 rupees at free of cost. We received from the government at free of cost. What I should do for this case, in case of non-depreciable asset, what I have to, how I have to account this amount? Just share your views. Non-depreciable asset, how I have to account this amount? Just share your views. We have to reduce 100 minus 100 and we have to present as a 0, or how we have to do it? So as per the AS12, for this 100 rupees free of cost amount we received, no. For this we have to create capital reserve. For this we have to create a capital reserve 100 rupees. Okay. So it as a reserve have decide. Okay, this is what. So what is journal entry? What is the journal entry then? What is the journal entry? What is the journal entry? Land account debit to the final journal entry. The net journal entry will be land account debit to capital reserve account credit 100. Okay, this is what they mentioned there. This is what we mentioned there. So any doubts on this? Shall I proceed further? We'll go to the next thing. We'll go to the next thing. So if it is a fixed assets, then this is the accounting treatment. Under the accounting treatment, one, you can reduce, first alternative, you can reduce from the grant from the total cost directly. That is one alternative. Second alternative, allocate the income to the P&L account over the period on the basis of useful life of the asset. That is second alternative. If it is a non-depreciable assets, directly credit the capital reserve. This is the accounting treatment in case of fixed assets. In case of fixed assets, this is the accounting treatment. Then come to the next slide. We'll go to the next slide. In case of revenue, I am receiving some grant related to revenue. Then what will be the accounting treatment? That is what is here. In case of revenue means what, sir? What is revenue? What is the grant related to revenue I will receive? For example, you are receiving you incurred huge electricity expenses. The company has incurred huge electricity expenses. 1 crore rupees they incurred as an electricity expenses. They are unable to repay to the government. So government is saying, okay, you had an electricity expenses debited to P&L account 1 crore rupees. Fine. You need not to pay that amount to us. You take it as a grant. That is revenue nature. Okay? That is revenue nature. If I receive, for example, 1 crore rupees is my electricity expenses. I received 50 lakhs from the government as a grant. They are saying you pay balance 50 lakhs, we will give grant 50 lakhs to you. Then what is the accounting treatment? Where I have to account? How I have to account? That is what we are going to go through here. Okay? So grant related to revenue should be recognized on a systematic basis in the P&L statement. What is the meaning? Grant related to grant related to revenue should be recognized on a systematic basis in the P&L statement. Okay. Such grants should be shown separately either under the other income or deducted from the related expenses. Such grants should be shown separately under the other income or deducted from the related expenses. So what they are trying to say? What they are trying to say is, say for example, this is my P&L account. This is revenue grant. Okay. So in case of revenue grant, what I did is electricity expenses. To electricity expenses, 1 crore rupees. Government is saying, you need not to pay 50 lakhs, you pay only 50 lakhs. You take it this 50 lakhs grant. Then what you do as per the account statement is minus government grant, 0.5 crore, that is 50 lakhs. 0.5 crore is 50 lakhs. 1 minus 0.5 crore equal to 0.5 crore is my net electricity expenses. Okay. This is what the AS told says. If you receive something related to your revenue account, something related to your P&L account, then you can adjust related to these expenses. This is second point actually. Just go through the second point. Just go through the second point. What it is mentioned. Such grants should be shown separately either under the other income or deducted from the related expenses. Or just go through the last line. Or deducted from the related expenses. So that is why I'm deducting here. So that is why I'm deducting here. Related expenses is 1 crore. Electricity expenses. Government received electricity refund 0.5 crore. That is 50 lakhs. So I'm deducting from my 1 crore. 1 crore minus 0.5 crore equal to 0.5 crore is my net expenses. This is one way. This is one method. Another method, government is saying simply give some amount, simply giving some amount to run my operational expenses, to run my operational things, government is giving some amount. Operation is related to day-to-day business. To manage my day-to-day expenses, government is paying some amount to me as a grant. Then such type of grant I can present under other income. For example, government is giving 10 lakh rupees. 10 lakh rupees credit because that is not that related to particular expenses. Government is generally giving some grant to manage my expenses. Then that it becomes, I will present under other income as 10 lakh rupees. Okay. Fine. So next category is promoter contribution. Next category is promoter's contribution. What is this promoter's contribution? I think all of you just listening, all of you there, and we are going in the right direction. Okay. So just share your view. Promoter's contribution means what? What is promoter's contribution? As per you, what is promoter's contribution? Owners, capital, owners. Just share your views. Lot of uh, don't hesitate to message. Just message your views. Once you ask to share, just share what is there in your mind. Contribution some money to company. Good. All of you, all your answers are correct. So the point is sometimes what will happen? No, government will give plant and machinery that is related to fixed assets grant. Government will give money to buy the fixed assets specifically. They will give. You have to purchase the fixed assets. That is then the grant related to fixed assets. Okay. Sometimes government will give land that is non-depreciable assets. Grant related to non-depreciable assets. Sometimes government will give money to repay my operational expenses. That is related to revenue grant. Sometimes what will happen? Sometimes what will happen? Government will simply give the money for starting the business. For starting the business, or for expansion purpose, government will give some amount. Okay, that is not specifically earmarked for some purpose. They will say, for example, the company wants to start a business in remote area. Remote area, the company wants to start a business. So they are asking government, please share some capital contribution as a grant. As a grant, not as an investor, not as a shareholder. Simply give me some amount. I need 100 crores to run this, to start this business. So give me 25 crore as a grant. Give me 24 crore as a grant from the government. They're asking. So government is also saying, okay, your total capital is 100 crore. We will give 25 crore at a free of cost. You do whatever you want to do. That is, it's in the promoter contribution nature. That is as a capital contribution. Okay? That is not specifically for some purpose. Okay? So, government grants can be in the nature of promoters contribution. Example, capital subsidies for a project. Such grants must be credited to capital reserve account. Such grants must be credited to capital reserve account. Is there any condition to be fulfilled? For everything there will be conditions. It's not like that, okay, government gave money, then we will enjoy the money as per our wish. It's not like that. Even though they are giving a promoter's contribution, still they will put lot of conditions. We will not bother about all those things. We will understand what is capital contribution. Okay. So now the accounting treatment. If I receive something in money that is not specifically earmarked for some purpose, then what is the accounting treatment? What we have to do? Just read the last line. What we have to do? Such grants must be credited to capital reserve. Okay? Such grants must be credited to capital reserve. Then what is the journal entry? Say for example, I received 25 crores from the government. They transferred money to my bank account. Okay? What is the journal entry you will pass? You received money as a capital contribution, promoter's contribution, 25 crores. They just transferred in one click. They transferred. You got 25 crore in your bank account. What is the journal entry you will pass? Just message me your views. What is the journal entry you will pass? Please message me. What is the journal entry you will pass? You got money from the government. Bank account debit to bank account debit because you received money. Full journal entry, no. I'm asking full journal entry. Bank account debit to capital reserve account credit. Correct. That is what we are discussing here. Correct. Such grant must be credited to capital reserve account. So the journal entry is bank account debit to capital reserve account credit. Bank account debit 25 crores, capital reserve account credit 25 crores. Okay. So with this, the method of accounting is over. Why we are discussing these points? What is the purpose? Why we are discussing all these points? Why? Because examination, they will test you the case laws. They will test normally. They will give one scenario and you have to give your opinion. On this particular scenario. They will give one case law and you have to share in the right accounting treatment. So with this presentation, with this PPT, till now, whatever we did, with this we can try to solve a few problems. With this we will try to solve a few problems. As I said in first class, you should have your own material, calculator, even a notebook. You try to work out maximum possible While discussing, if time permits you, you can try to work out that also. So this is the institute material, accounting for government grants. Just go through the question alone. Just to go through the question alone. Can you able to see the question? Just to go through the question. Please go to the question. First, you read the question, and you have to first point is you have to decide what nature of grant it is, whether it is a capital nature or revenue nature, whether it is a fixed assets related, whether it is a revenue income or whether it is a promoter contribution, what nature of grant it is. Then the next thing is what is the accounting treatment. Just go through the question. Just go through the question yourself. Please go through the question. Please go through the question. Just go through. I will come in 30 seconds. So it's to receive as per public scheme announced by Government of India a subsidy of 25% of cost of investment. Cost of investment. Cost of investment la 25% subsidy given by government. Okay. Having fulfilled the condition laid down under the scheme, the company on its investment of 100 lakhs in capital assets. They are investing in what? Capital assets. Asset they are investing. During its year end 31st March 2012, received subsidy of 25 lakhs in January 2012 from Government of India. So the accountant of company. So the accountant of company would like to record this as an item of revenue and to reduce the losses of the P&L account for the year ended 31st March 2012. This action is justified. What happened? There is a company. They are going to start some business. They want 100 lakhs. They are going to invest in asset for 100 lakhs, capital asset. Okay. Out of that 100 lakhs, government is giving 25 lakhs as a government grants. They received 25 lakhs from the government. Okay, but the accountant of the company, what he did is that 25 lakhs he debited to P&L account as an income or as an reduced from the he reduced from these expenses. That whether that is correct or not, as per you, whether that is correct or not. Just tell me yes or no. Only one answer. Accountant answer is correct or not. Yes or no. Just message me. No. No. Yes. No. 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 Then come on. What about rest of the peoples? What about rest of the peoples? No. No, sir. So no is the correct answer. Why? Because first of all you have to check. First of all you have to check what nature of grant it is. Here the government is giving grant for the purpose of investing in assets. Then that is capital nature. Now the next question is whether this is nature of promoter's contribution, whether this is nature of fixed asset grant or whether this is the nature of promoter's contribution, that we don't know. But the question says asset. Asset means we can say it is a fixed asset. So we can assume that is fixed assets. Okay? And also we can assume it is a depreciable fixed assets. We can assume these are the assumptions we are taking. Okay? So if it is a depreciable fixed assets, what is the accounting treatment? What is the accounting treatment if it is a depreciable fixed assets? Since question is silent, we have to write both the accounting treatment. We have to write both the accounting treatment, not alternative one, two only. Alternative one or alternative both we can write in examination. We have to write both the alternative. That is better manner. That is safer side. Okay. Here in this answer, now we go through the answer. Which method, which alternative they used in the solution? Which alternative they used in the solution? Which alternative they used in the solution? Just go through the answer first. Just think the answer yourself. Alternative 1 what is the answer? Just think. Just think in your mind. Alternative 2 means what is the answer? Just think in your mind. Alternative 1 means what will happen? We have to reduce from the grant. Sorry, we have to reduce from the cost of the asset. Grant should be reduced from the cost of the asset directly. That is alternative 1. Then alternative 2 is grant should be proportionately transferred to P&L account based on the useful life of the asset. Correct? Over the period it should be transferred to P&L account. Till that it should be presented under deferred government grants under the liability side. That is alternative 2. In this question, in this answer, they solved this question by answer alternative 2. That is, they are transferring the deferred income to P&L account based on the useful life of the asset. Okay, that is the alternative 2. You better you write all 2 answers. Alternative, you mention alternative 1, then you write should be reduced on the cost of the asset directly. That is alternative 1. Then you write alternative 2 in examination. Don't simply write alternative 1 or alternative 2. Better write both the answers, because this is case study oriented problem, not practical problem. Not like we have to work out the problem. We have to write in English. We have to write the just alternatives. We have to write just the accounting standards. Shall we move to the next problem? And you should also mention one more point, that accountant is wrong. Accountant view is not correct. That also you should mention. Okay? Shall we move to the next question? Illustration 5. Why it can't be promoter's contribution? Because promoter's contribution, based on the question language used only, we have to assume that. Here they mentioned that they need a capital investment. They were going to invest in the assets. Okay. If these words are there in the question, we have to take it as it's related to fixed assets. Simply they are mentioning capital contribution, promoter contribution in the question means, then we can consider as a promoter contribution. Okay. Shall we go to the next question? Illustration 5. Just go through the illustration 5. Just go through the illustration 5. Just go through the question only. Don't read the answer. Just go through the question only. Don't go through the answer. Just go through the question. Don't read the answer. So what is the question? Euro Limited belongs to the engineering industry. The chief accountant has prepared the draft accounts, taking note of the mandatory accounting standard. The company purchased 1 to 2,000 a special purpose machinery for 50 lakhs. It received central government grant for 20% of price. The machine has an effective life of 5 years. Question is not very clear. They are giving a scenario. They mentioned that what is the accounting treatment as per year. Okay, but they didn't mention. But we have to assume the problem related to government grants. So as I said initially, first step is what? We have to identify what nature of grant it is. One question: what nature of grant it is? Fixed assets nature, revenue nature, or capital contribution, promoter contribution nature? Just message me. Fixed assets nature, revenue nature, or promoter's contribution nature? Fixed assets, fixed assets, fixed assets, fixed assets, fixed assets, fixed assets. Fixed assets. Okay, correct. If it is a fixed assets, if it is a fixed assets nature, we have two alternatives. We have two alternatives, correct? If it is a fixed assets nature, we have two alternatives. Under the alternative one, you can directly reduce from the cost of the asset. That is one alternative. Under the alternative two, over the period of useful life of the asset, we have to allot the you have to transfer the grant to the P&L account. That is alternative 2. Okay. So what is the answer? They solved the answer by which alternative or second alternative? First or second? Just mention 1, 2, 1, 2. You mention 1 or 2. 1, 2. Mention now. Only around 10 people repeatedly messaging. What are the guys? All of you try to participate. I know this is a little bit difficult, the way of learning and all little bit, but we have to make it. We have to make it possible also. Okay, 2, alternative 2, correct. Alternative 2. Then the same English, same whatever I said, the same thing will be repeated. So I am not going to read the answer again. We just go through the answer again. We'll move to the next problem. So illustration 6. So before getting into this problem, you may have some new doubt. Say for example, if government is giving grants to the company, why they did not follow alternative 1? Your choice. You can write better whatever you write both the answer in examination. First alternative, second alternative, both the answer you write. Sometimes they will solve by first alternative. Sometimes they will solve by second alternative. Because it is choice. You can take it anyone. Both the answers are correct. Okay. We'll go to the next question. Before getting into the next question, what I am discussing is if the grant received from the government is based on condition fulfilled, is based on the condition fulfilled. Government will give lot of conditions while giving the grant. Sometimes what will happen, company may not be able to fulfill the conditions. Fulfill the conditions. In such case, what will happen? Government said you have to follow these conditions. Government is also gave the grant, but after some years, for example, out of 5 years, first 3 years they satisfy the condition. On 4th year, they are not able to satisfy the condition. What we should do? Tell me in such case. As per you, what we should do? As per you, what we have to do? I got the money from the government and later I did not satisfy the condition. Company, what they should do? As per you, what they should do? Tell me. Just put 1 or 2 lines. Whether they should enjoy the grant or they have to do something else. We have to refund the grant. Refund the grant. Yes, we have to refund the grant. Why? Because you are not satisfied the condition. Grants refundable. That is called what? Grants refundable. Under that, the amount refundable and relating to specific fixed assets should be adjusted by increasing the book value of assets. The amount refundable and relating to specific fixed assets should be adjusted by increasing the book value of assets. If the grant is refundable, then what accounting treatment I should do in my books of account? That is what mentioned here. Okay? What they are saying? For example, 100 crore is my fixed assets, cost of the asset. 50 crores I received grant. Okay? Life of the asset is 5 years. Life of the asset is 5 years. I completed first 3 years successfully. 4th year, what happened? I am not able to satisfy the condition. So I have to refund the government grant. Initially, how much I received? 50 crores I received. Now I am not able to satisfy the condition. So I repaid the government grant, 50 crores. What is the accounting treatment in the books of accounts then? Now what I should do with that 50 crore? Tell me. Now what I should do with that 50 crore? Tell me. As per you, what I should do? What I should do with that 50 crore? Just message me your answer. As per this point, what I should do with the 50 crore? 50 crore, in a panano, what I should do? What I should do with that 50 rupees? $50 crore added back to the value of the asset. Good. So, liabilities, assets. As I said, 100 crore is my initial thing. 100 crore is my initial thing, and 50 crore. Assume I used first alternative. I used first alternative means 100 minus 50. 50 crore is my revised book value. Revised book value is how much? 50 crore. On this, I will provide depreciation. Life of asset is equal to 5 years. Straight line method. Assume straight line method. Okay. 50 divided by 5 equal to how much? 10 rupees. What I will do? Every year I will minus 50 minus 10. 50 minus 10, 40 is my book value. Second year what I will do? Again 40 minus 10. 30 is my book value. Again third year I will do. What I will do? 30 minus 10. 20 is my book value. Opening balance. Fourth year. Opening balance equal to 20 crore. Okay? Till this you understood? Till this you understood? Till this you understood or not understood? Okay. On fourth year what happened? I'm not able to satisfy the condition. On fourth year what happened? I'm not able to satisfy the condition. Here what I should do? You tell me. 50 crore I paid initially. Sorry, 50 crore I received as a grant initially. Now I am not able to satisfy the condition. What is the accounting treatment? Tell me. What I have to do here? Now what happened on fourth year? I refunded the government grant. Fourth year I refunded the government grant. What I should do in my books of accounts? Tell me. What I should do here? 50 crore is added back. So what happens in fourth year? I refunded the government grant, meaning I spent my money 50 crore. 50 crore means I refunded the government grant means what? I paid out of my packet to the government, which means I am adding back 20 plus 50 equal to 70 crore is my revised book value. 70 crore is my revised book value on fourth year. On fourth year beginning. On fourth year beginning, my opening balance is of 70 crore. Now the next question you can ask me, sir, if it is 70 crore is the revised book value, then what about depreciation? How to calculate depreciation? Because previously we calculated 10 rupees. Now how to calculate depreciation? Okay? If you have such doubt, then come to the next point in this slide. When the book value of, just go through the presentation. When the book value of asset is increased means what? 20 plus 50. Increased means what? 20 is the opening balance plus 50. That is increased. Then continuation. Depreciation on the revised book value. Depreciation on the revised book value is provided. How it is provided? Prospectively over the residual useful life of the asset. Prospectively provided over the residual useful life of the asset. Over means what? Evenly over the residual useful life of the asset. What I should do? Prospectively means what? Retrospectively means what? Prospectively means what? Retrospectively means what? What is prospectively? What is prospectively? What is prospectively? Remaining useful life of asset. Remaining useful life. Prospectively, retrospectively. Retrospectively means what? Prospectively means what? Retrospectively means what? Past event. Any other answer? Any other answer? Past event from Suchitra. Any other answer? Retrospectively means from the beginning or from when it is actually implemented. from when it's actually started. Prospectively means year onwards. Year onwards is prospectively. Okay. So the point is how I have calculate depreciation. This is what mentioned. When the book value of asset is increased, the depreciation on the revised book value is provided prospectively over the residual useful life of the asset. The meaning is the same problem, the same problem, same problem. 70 crore is my opening balance. 70 crore is my opening balance. What is the life of the asset? Remaining life of the asset is how much? Remaining life of the asset is how much? Total life is how much? Total life, total life how much? Life of 5 years. Already depreciation how many years completed? Already depreciation how many years completed? 3 years completed. Balance 2 years remaining. Remaining 2 years. So what they are saying is this depreciation should be apportioned for the remaining residual life of the asset. So remaining life of the asset, the revised book value is 70 crore. Remaining useful life is 2 crore. So 70 divided by 2. 70 divided by 2 equal to 35 crore. 70 divided by 2 equal 35 crore. So what is my depreciation for the fourth year? 70 minus 35. 70 minus 35 equal to 35 is the opening balance for the fifth year. Again, fifth year depreciation. Again, fifth year depreciation, 35. Then my closing balance will be 0. Okay? This is what I mentioned there. Understood? Shall we move further? Yes. Shall we move further? Shall we move further? Yes. Okay. Now the next question you can ask me. Sir, if it is a second alternative, figure as a standard, that should be if it is a second alternative and the government grant is refundable, then how to account that? Because this is for first alternative. This is for what? First alternative. If it is a second alternative, what to do? When grant refundable, this point we will discuss. Before that, you will go through the last point first. We will go through the last point. Then we will come to the middle of the point. Then we will go to the middle point. First, just go to the last point. Amount refundable to the government should be accounted by debiting first any unamortized deferred credit remaining in respect of grant. If refundable exceeds any such deferred credit, the amount is charged to the P&L statement. So this also I will explain you. There is one problem which is available in the old syllabus material. I will explain that. Okay. Instead of reading the theory, I will explain later. What is the middle point? What is the middle point? Middle point is related to, sir, if it is a grant refundable related to, refundable related to capital contribution, that is promoter's contribution, then what we should do, sir? Capital contribution, promoter contribution, I said that simply government will give money. You do whatever you want. Simply government is giving money as part of the capital. Initially, what entry I passed? Initially, what entry I passed when I received the promoter contribution? What entry I passed? Initially, when I received the money, what entry I passed? Initially, I passed bank account debit to capital reserve. Slide is not visible. You are able to view the slide, correct? Put yes, one line yes. You are able to view the slide. You are able to visible. You are able to view the whiteboard. Yes, yes, yes. Majority is yes. Then you have to check your mobile or laptop. That box there in slide. Small box is there in slide. You are able to view. Yes. Okay. Now we will go to the answer. So bank account debit to capital reserve account is the entry initially we passed. But now what happens? But now what happens? I am going to refund this amount. Initially I received 100 crore. So what I did 100 crore, 100 crore. Now what happens? I am going to repay this amount. Then I will do this entry by debiting the capital reserve. Capital account debit to going out, money is going out to bank account credited. 100 crore, 100 crore. This is what mentioned there. This is what mentioned there. Now we just go through the third bullet point. When grant refundable comma, it is the nature of promoter's condition comma. The relevant amount is reduced from the capital reserve. Okay. So now come back to this problem. Now come back to this problem. Now come back to this problem. Just go through the question. Just go through the question. Just go through. Please go through the question. What I recommend personally is you take your notebook, solve the problem side. That is very, very good for you. Just going through the videos or listening will not do much. Try to solve the problem wherever it is possible. If it is a practical oriented problem, try to solve. Theoretical problem, you can just go through, read the problem. That is not a problem. If you don't have time means. Or else, if it is a practical problem, better solve it. That is the best practice. So now what I suggest is, take your notebook. All of you take your notebook. Take your notebook. Take your notebook. All of you take notebook. Please take your notebook. You are studying for yourself. We are the professionals, so I don't need to. Somebody needs to monitor you, or somebody needs to, uh, just doing something and you. That is not required. You are a professional student. Correct or not? This is the best way of testing whether student or not. Because I don't know, I'm not able to. You are just going through the videos. I'm just able to see your messages only, and I'm requesting you to take your notebook and work out the problem. All of you ready for that first? All of you having that notebook with you, notebook and pen? I will also work out, don't worry. Put yes, sir. How many of you having the notebook? Okay, we'll proceed. So just go to the question first. Okay, good. Lot of replies I'm getting that all of you having notebook. Because we have to work out. This is not purely theory subject, nah. We have to work out. It's an accounts. Accounts will come only by practice. Nothing to do with intelligence. Nothing to do with brilliance. The more you practice and the more you dedicate, success will come to you. Just go to the question. What is the question? On 1st April 2015, Hero Limited received government grant of 300 lakhs for purchase of machinery costing 100 lakhs. The grant was credited to the cost of the asset. Good. The life of the machinery is 5 years. The machinery is depreciated at 20% on WDV basis. Company had to refund the grant in May 2018 due to non-fulfillment of certain conditions. How would you deal with the refund of the government grant in the books of Hero Limited? Now the first thing is, what nature of grant it is? Just message me, fixed capital revenue. Fixed capital revenue, what nature of government grant it is? Fixed or capital or revenue? Fixed. Okay, good. Okay, good. Then we will proceed further. Fixed nature, good. We'll proceed further. So if it is a fixed nature of grant, now the next question is whether they in question itself they gave one hint actually, whether they worked out the companies worked out the fixed assets under the first alternative or second alternative. The question is itself there is one hint. Just don't go through the answer. Just go through the question. Whether they solved this problem, the company is worked out the grant by first alternative or second alternative. Just go through the question and tell me which line it is mentioned. Somebody is mentioned first alternative, somebody is mentioned second alternative. Which line in the question they mentioned they did by first alternative or second alternative? Which line they mentioned they did by first alternative or second alternative? In question itself they mentioned, but second line, what they said, second line, the grant was credited to the cost of the asset. The grant was credited to the cost of the asset means what? My cost of the asset is 1500 lakhs and I am crediting the cost of the asset means 1500 minus 300 equal to 1200 is my revised book value. That means they followed the first alternative. Okay? The grant was credited to the cost of the asset means they are reducing from the cost of the asset. So they followed the first alternative. So you understood. Now they followed the first alternative. Now what we have to do? We have to read the question further. Life of the machinery is 5 years. Depreciation is provided at 20% on WDV basis. And company is not able to satisfy the condition from May 2018. When company asset is purchased from 1st April 2015. 1st April 2015 they purchased. First 3 years they satisfied the condition. On the 4th year they did not satisfy the condition. That is the question actually. I'll just write few lines, then you solve. So what happened? 2015, 1500 crore. They purchased the asset. They credited the cost of the asset, meaning they reduced from the grant. Then 1200 is the revised book value. 1200 is the revised book value. Then they did by WDV at 20% on revised book value. Revised book value is 1200. So 1200 into 20% is 1200 into 20%. Then how much will 960 will come. Like this, you do it for up to 3 years. Like this, you do it for up to 3 years only. Don't do anything on 4th year. Up to 3 years you complete. I'll give you 2 minutes just to complete. This is nothing but depreciation. Just to complete and put yes. But you should be very genuine. You should actually do it and you put yes, not before that. I'll give you only 2 minutes. Please start yourself and complete up to 3 years. Please complete up to 3 years. What to complete? Just to provide depreciation. Just to provide depreciation up to 3 years and tell me the book value on the opening, on the fourth year opening. On the fourth year opening. Just you please of first 3 years only I want. First 3 years I want it. 614. Somebody has written 614. Six 614.4. 614.4. 614.4. Government grants to the government. If they repay the government opening balance fourth year. Opening balance fourth year is 614.4. So as per the question, what happens? As per the question, May 2018 itself. May 2018 means beginning of the year, April, May. Depreciation will be provided at the end of the year only. But here, the beginning of the year, May 2018 itself, they did not satisfy the condition. They did not satisfy the condition, then they have to repay the government grants to the government. If they repay the government grants to the government, what will happen? 614.4 plus 614.4 plus as per our AS 12 should be added back, grant should be added by increasing the book value. So 614.4 plus 300 equal to 940.4. Why I am adding this 300? Because this is grant already deducted in the beginning of the question. Beginning of the answer we deducted the 300. Now we are adding back. Why we are adding back? Because this is grant refunded by the company. Meaning government company paid out of the package to the government and they paid their money 300 crore to the government. So now my revised book value on fourth. My revised book value on fourth is 914.4. Now my question is, depreciation should be provided for the remaining life or we have to provide from the beginning. Depreciation on revised book value, we have to provide for the remaining life of the asset, or we have to calculate everything from the beginning. Remaining life. How many life? Out of 5 years, I think, out of 5 years, out of 5 years, 3 years is over. Anything else? Maybe exact answer, but we will take it as a 2 years. We will assume as a 24 months, okay? Out of 5 years, 3 years is over. So balance 2 years. Okay? Okay, this is correct. But the point is, for this 2 years, for this remaining 2 years, how to provide depreciation? Definitely, don't go through the answer, insert material answer, and don't tell me. Tell me your own answer. How to provide depreciation? Definitely, that is the actual as per the question, but as per the PowerPoint presentation, if you go through the second point, what is the thing given here? Revision and revised book value is provided prospectively over the useful life of the asset. Prospectively over the useful life of the asset. Over the useful life of the asset means evenly provide depreciation. Evenly means uniformly. Uniformly means same figure. That means you have to convert into SLM. That is what my understanding. Okay? Over the residual useful life of the asset. So what we have to do is, for the remaining life, we have to check how many years pending. 2 years is pending. 2 years is pending. Then what we have to do is simply 914.4 is the revised book value. 914.4 is book value on this revised on this remaining life of the useful is 2 years. So 914.4 divided by 2 equal to how much? 914.4 divided by 2 equal to how much? Just message me. 456. Yeah. 457.2. So what I'm going to do is 914.4 minus depreciation 457.2. Okay? Then balance 457.2. Balance means 50 year. I mean 50 year. This is fourth year. This is fifth year. Fifth year, what is the remaining depreciation? 457.2. Then balance is 0. Okay? Understood? 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 Okay. There are a lot of problems available actually in the old syllabus. Old syllabus, you have a lot of problems. What I suggest is all download the 2012 old syllabus and solve few problems from that. So thanks a lot. I'll close the session.